If you've been exploring ways to grow your money in the UK, you've probably heard about the stocks and shares ISAs. They're often mentioned as one of the most tax efficient ways to invest, but what exactly are they and how do they compare to other tax wrapped accounts like pensions or lifetime ISAs? In today's video, we're going to break it all down in simple terms. Whether you're new to investing or just curious about how these accounts work, we'll cover what a stocks and shares ISA is, how it differs from other tax efficient accounts, why people choose them, and practical strategies to decide if it's right for you. By the end of this video, you'll understand how stocks and shares ISAs can help you grow your wealth whilst keeping more of your returns. So let's dive in. Before we get into comparisons and strategies, let's start with the basics. What a stocks and shares ISA is. At its core, a stocks and shares ISA is an investment account that allows your money to grow tax-free, unlike regular savings or investment accounts. And profits you make, whether from dividends, interest or capital gains, are completely shielded from UK taxes. So here's how it works. Each tax year, either April the 6th or April the 5th, every UK resident over 18 gets an ISA allowance. For 2024 to 2025, it's 20k. You can invest in a range of assets like stocks, bonds, mutual funds, ETFs or even REITs. The key benefit is that you don't pay income tax on dividends or capital gains when you sell your investments. Think of it as a protected wrap around your investment that keeps the taxman out. Now that you know what the basics are, let's compare a stocks and shares ISA to other popular tax wrapped accounts in the UK. First, we've got pensions. Pensions are another excellent tax efficient option, offering upfront tax relief on contributions. However, there is a key difference. When you withdraw your pension in retirement, most of it is taxable, aside from the 25% tax-free lump sum. By contrast, withdrawals from a stocks and shares ISA are completely tax-free, no matter when or why you make them. Up next, we have lifetime ISAs. ISAs are designed for two specific goals: buying your first home or saving for retirement. When you contribute to a LISA, the government adds a 25% bonus to your saving, but there's a catch. Early withdrawals not related to buying a home or retirement come with penalties. Stocks and shares ISAs, on the other hand, offer much more flexibility with no restrictions on access to your funds. Up next, we have cash ISAs. Whilst cash ISAs offer a safe way to save, they generally provide much lower returns because they're not tied to investment. Stocks and shares ISAs offer greater growth potential, especially over the long term, though they do come with the risk that your investments could lose value. So you're probably thinking, why are stocks and shares ISAs so popular in the UK? Here are the key reasons. At number one, they're super tax efficient. The standout benefit is the ability to grow your investments free from income and capital gains tax. It's a simple way to maximize the money you keep, making it an ideal choice for long-term investors. Number two is the flexibility that they have. Unlike pensions or LISAs, there are no restrictions on when or why you can withdraw your money. This makes stocks and shares ISAs great for people who want the freedom to cash out for emergencies, investment opportunities or other reasons. Number three is they allow diversification. With a stocks and shares ISA, you can build a diversified portfolio by investing in a wide range of assets, from individual stocks and bonds to managed funds and ETFs. This flexibility allows you to tailor your investments to suit your goals and your risk tolerance. Number four is the long-term growth. Historically, investing in the stock market has outperformed cash savings accounts over the long term. By wrapping these investments in an ISA, you protect your returns from taxes, supercharging your growth potential. Now, let's talk about whether a stocks and shares ISA is the right choice for your financial goals. Start by asking yourself these questions. Number one is, do you have an emergency fund? Before you invest, make sure you have a safety net in place, typically 3 to 6 months worth of living expenses, saved in a readily accessible account. This way you won't be forced to sell your investments if you need fast cash. Saving your money in a cash ISA is a great way to do this. Number two is, are you comfortable with the risk? Investing always comes with some level of risk. Stocks and shares ISAs are no exception. Unlike cash ISAs, your money isn't guaranteed. You could lose value in the short term. However, because the stock market tends to grow over time, many investors see this as an acceptable trade-off for the greater potential returns. Number 3 is, do you value flexibility? If you want an account that doesn't lock your money away or penalise you for withdrawals, a stocks and shares ISA might be the perfect fit. If you decided that a stocks and shares ISA is right for you, here are some strategies to help you get the most out of it. Number 1 is to start early. The earlier you can start investing, the better. Your money has more time to grow, and the effect of compounding interest can make the huge difference over the years. Number 2 is to use your full allowance. Try to max out your 20k annual allowance whenever possible. The more money you shelter within an ISA, the less tax you'll pay on your investment growth. Number 3 is to diversify your portfolio. Don't put all of your money into one stock or asset. Spread your investment across different sectors, regions, or types of funds to reduce the risk. This way, even if one investment underperforms, others in your portfolio can balance it out. Number 4 is to use dollar cost averaging. This strategy involves investing fixed amounts at regular intervals, say monthly, weekly, etc. Rather than trying to time the market, it can help you to avoid the stress of guessing the best time to invest, and it also smooths out market fluctuations over time. So let's jump into my final thoughts. Stocks and shares ISAs are by far one of the most effective tools in the UK for investors looking to build and protect their wealth. By combining tax efficiency, flexibility, and the potential for long-term growth, they're a popular choice for anyone serious about investing.